Today, we're going to discuss strategies to optimize revenue and boost our profits. This is a very poignant topic. I know that a lot of people are going to be looking at their financial figures at the end of the year, and they're going to ask themselves, what could I do to improve for 2022? And so I think we're going to pull a lot of really great, valuable insights from all different perspectives today. So really excited that you're joining us. So a little bit about me. I'm Paul Zukowska. I'm the VP of Customer Success at Guesty. Been here for about 2.5 years, loving every day. It's been great. And I love working with all these different PNCs and kind of marketplace providers that we have. A little bit about our panel. We're joined by Adrian Janks from AngelHost. AngelHost is this phenomenal company that's actually a partner with Guesty, but also offers a lot of back-end operation support for property managers. Dale Smith is joining us from Host and Stay. More traditional on the PMC side. And then Ryan Saylor is joining us from as a revenue management analyst from Beyond. And so we're definitely going to hear from each one of them and kind of have a really kind of involved and engaged discussion to follow. A little bit about the format. You'll hear from me, just a few words, and then I'm sure you want me off the screen as soon as possible. And so we'll get to the presentations from both Adrian, Dale, and Ryan, and then we'll kind of wrap things up with a little bit of a panel discussion. So what are we seeing in the holiday season today at Guesty? And so if you haven't booked your holiday, your Christmas kind of inventory, chances are you will be booking it very soon because the demand is very, very high for the Christmas season, both in the United States as well as in the UK. We're up close to 500% in the United States as far as the volume of reservations that we've seen already committed within that longer booking window for Christmas. And then the UK is up 433% versus kind of last year. Additionally, New Year's Eve is seeing really great opportunity as well with a almost 100% increase in reservations confirmed for the New Year's holiday and 240% confirmed in the UK. It's not just the reservations and the occupancy. There's also a significant shift in a very positive direction regarding kind of the ADRs that we're seeing and the average night rates. And so the booking prices in the United States are up 36% over Christmas and 69% in the UK. And then, over the New Year's Eve holiday, only 25%, I know to say only 25% increase seems awkward over New Year's for the United States. But also in the UK, they're up 207%. Obviously, the vaccines and the pandemic play a large part in people's comfort levels with booking at a larger booking window. And I'm sure this is something that our panelists are going to talk and cover. In the COVID world, you're probably already doing this with a lot of your inventory, but the new personas of the guests, this is what they're requiring. They want the flexibility of the calendar because they feel still uncertain about what the future holds. They're looking for increased guest communication. So, that automated messaging platform that Guesty offers goes a really long way in helping you kind of increase the dialogue or the touch points that you're having with your guests. And then also contact-free kind of experiences, whether that's remote locks or even kind of that guest messaging, the check-in process. Really, they want that as automated as possible. Through whatever kind of platform tools are available to them. So a little bit about PricewaterhouseCoopers did a data analysis on short-term rental operators and learned that those organizations that are more data-driven outperform their competitors by 6% in profitability. It makes sense that if you're able to analyze the information that's in front of you, you're able to adjust and actually grow your profits as a result. And so if you're not leveraging analytics tools today, we strongly encourage that you as a property management company start to incorporate data to kind of inform your decision making. And so 162% of those that are using data are going to surpass their revenue goals. And then they're 3 times more likely to improve their decision making as far as how are they actually going to leverage information to inform their business to grow properly moving forward. And so enter Guesty's advanced analytics dashboard. This is an area that we've invested a lot of resources, time, and effort into, and we're seeing a lot of a lot of positive feedback from our user base. And so with our advanced analytics dashboard, you're going to get stock reports into revenue rates, guest communications, occupancy opportunities, reservations, even reviews. But you also have the ability to kind of customize your own reporting. So let me show you just a few of the more kind of stock out of the box options that you can look at. Something that Guesty is really proud to offer is this aggregate of the overall review score. As we know, the reputation of the listing is directly tied to the ADRs that you can charge for that listing. And so by having a pulse on where your reputation, your review scores are across a number of different platforms will allow you to kind of properly tweak your ADRs or properly improve your operations to better accommodate a growing reputation within that listing. Additionally, we have the reservations breakdown. Something that's very important as far as kind of setting your nightly rates is understanding the booking window that each listing may have, or each area of your listings may have. And so by having visibility into the likelihood of your booking window, you're going to be able to accommodate your pricing strategies a little bit better there. And so this is an example of one of those reservation breakdowns. And then we're also showing here the guest messaging and the guest communications. And so when you're looking at your overall guest communications team, you want to properly staff based on the information that you're traditionally seeing across all your listings. And so having this visibility through advanced analytics into your guest communications will really go a long way in informing how are you managing that team. All right, so like I said, I want to keep myself short. Let's go ahead and introduce our panel, Adrian, Dale, and Ryan. I think first up is Adrian to kind of walk us through how Angel Host is approaching revenue management.
Thank you very much for inviting me to be on this panel. So let's start the presentation. Just a quick slide about who we are. Angel Host is a service for property managers, owners, and investors to support them with their vacation rentals to outperform their market. We are present in 7 countries with over 400 properties, and we have raised $5.2 million in a financial seed round, which is really amazing. On average, our clients are outperforming their market by 30%. And how do we do that? We create algorithm-based listings to ensure that we rank higher in the search results. We publish the listings on the major platforms based on best practices. We take care of guest services 24 hours per day, and our customer service team is using all Guesty features to deliver a really great guest experience. And of course, we strongly believe that in today's high competitive market, revenue management is a must. Okay, so today we are here to talk about the new normal and how to market your properties. As Paul mentioned before, demand is high, people are spending more for their travel, and more travelers turning to short-term rentals. Also, traditional seasonalities, as we knew them, are history and do not dictate anymore the future. In 2021, we saw extended summer seasons and longer stays for the Thanksgiving week in the US. Obviously, travel is back and demand is high. And while we have a bright and positive outlook for the future, the environment is still volatile because of the new variants. It's more important as ever to adapt and remain flexible when it comes to your pricing strategy. So let's go through together on some revenue management tactics in a few steps. The first 2 might be very generic. However, they are the base to build your pricing strategy. So who are your customers? Are they domestic? Are they international? Who do they travel with? Alone, in a couple, with their family? Where are they booking? Depending on the location and the inventory type of your property, OTAs will produce different results according to the segment that they are the strongest in. Also, when are they staying? For how long? And why are they traveling? So the new structure of life changed the way we travel, and with the possibility of working remotely, new travel personas emerged, and flexibility remains a key element when it comes to choosing their stays. And flexibility is about having the possibility to stay longer, discover new destinations, even in driving distance, and travel in any time of the year. Also, OTAs adapting to the new travel personas, like Airbnb, who launched I'm Flexible feature. So once you know your customer, you also need to know your competitive set. As you know, we are not alone in the market. So we know that travelers are willing to pay more for a certain location, like is it a beachfront or a non-beachfront property? Certain amenities, does the property has a private pool or not? Or the experience, which begins from the moment when they are starting to search the property. So from the start, you have to understand your market and create your own competitive set to get a clear picture. Your neighborhood next to the door might not necessarily your competitor. You have to look into similar amenities, type and size of properties. Just an example here. If we are relying on default settings, we would price the property on the average rate, what we see in the market analysis. That's why it's really important to make the right decision based on a clear competitive set. By using aggregated data leads to overprice one property and underprice the other one. In one word, you would leave money on the table by not charging enough or losing out of revenue by not getting any bookings. So now that you understand your customer and your market, it's time to price. The third step is pricing. So maximizing profit through price variation is crucial nowadays, and seasonal pricing is not enough anymore. It might have worked very well in the past, having only a low, mid, and high season rate. However, in today's environment, where vacation rental is becoming also professional industry as hotels and airlines, it's really important to have a dynamic pricing. There are different tools in the market, and Guesty integrates many of them. And Ryan from Beyond Pricing will talk more about dynamic pricing during this webinar. So after turning on your dynamic pricing, you also need to monitor your KPIs, key performance indicators, to take action and refine your pricing based on it. And here at Angel Host, we have a dedicated team who is doing it constantly. So what to track and how to act on today's constantly changing market. So of course, every market is different, but as a result of the pandemic, travelers are now staying much longer, mixing work and leisure. Make sure that you allow longer stays and make part of your strategy the length of stay discounts. By integrating discounts into your revenue management strategy, you can rank higher in search results and get more bookings, increasing your occupancy rate and also your revenue. The booking window is still short. However, it improved in the last month. As you can see here in the graph, respect to last year, where we were used to have very last minute bookings, now the booking window is higher because people are more confident to book. Analyzing the market trends, such as booking window and high demand days, can help you to determine whether you should discount or increase the rates. Also, by understanding how long people are booking by different booking window, you can apply a dynamic minimum stay strategy to capture valuable bookings. We know that shorter stays are happening in last minute. However, you don't want to block today, for example, for the next March, 2-night weekend stay and lose out on guests who are looking for longer stays. Also, the booking velocity. If you are booked too fast, your rates are too low. On the other hand, if you are not getting bookings and the market does, your rates have to be reviewed because you might be overpriced. Analyze the price elasticity of the demand, and you will know right away if you are priced too high. It will become obvious. For example, if you had 10 bookings yesterday, but today you received only 1, that's a clear sign, right? Expiring inventory, less chance to sell your nights. We have a time-sensitive inventory. We can't sell the past. Based on your occupancy rate, for example, if you have 100% vacancy for the next 7 days, it's your last chance to fill in those available nights. Also, there are other aspects to monitor. For example, the cancellation policy, which has an important impact on the performance. Adapt to your market to avoid losing out of bookings. For example, in the US market, high season is at the door. Of course, you don't want to have a very flexible cancellation policy right now. However, when you are heading to the low season, based on your performance and based on the market, you might need to review it. Be updated on special events, as technology might not capture fast enough new events due to postponed dates. For example, the Grand Prix for 2022 in Miami has been confirmed for the first time. So you really want to protect your rates, as you really want to avoid getting low valuable bookings for an event which will drive a huge demand. So how do we know how we perform with respect to the market and if we are not leaving money on the table? There is an index that we love to use, the market penetration index. It's a fancy name for a very simple calculation. The MPI tells you how well you are doing compared to your competitive set. Let's take an example. If, as of today, your occupancy rate for February is at 80%, but the average in the market is at 40%, then that means that the market penetration index is at 2. That's a very high index, and most likely you are underpriced and the property left money on the table. In this slide, we prepared a little cheat sheet. If you want, you can take a screenshot from it. So whenever the MPI is equal to 1, the property is getting the same fair share as the market does. Whenever it's under 1, the property is underperforming. Over 1, the property is outperforming. However, when we see a very high index, that's a red flag that most probably the property is leaving money on the table. So some key takeaways for 2022. So the trends, what we will see, and we are seeing already, recovery is booming, flexibility as key value for revenue management, and longer stays are here to stay. Simple steps to adapt. Know your market and competitive set to make the right price decision. Dynamic pricing is a must, especially in the continuously changing market. And do not set and forget. Adapt and refine your strategy based on your performance and future market trends. Analyze your KPIs to make the right decision. And thank you very much. And I hope after this presentation, you will have some good tips on how to boost your revenues. And you can contact us in all of these places on our social website and email. And thank you.
Perfect. Thank you very much, Adrian, for that. It's such a great reminder that 100% occupancy does not equal your full profitability potential, right? And there's this kind of equal kind of space where you can play where, what is the target occupancy, but still maximizing your ADRs on the top side of it, right?
Exactly, Paul.
And then let's not forget too that with 100% occupancy comes 100% operational expenses, right? All those cleanings and all of those guest messaging and everything, right? And so you're staffing for 100% when really you could be hitting revenue targets higher than that at like an 80 or 85% occupancy rate. So really great reminders. Thank you very much for that, Adrian. That was fantastic. All right, next up we have Dale Smith.
I'm Dale from Host and Stay. And we're a property management company located in the northern part of the UK. One of our primary territories is North Yorkshire. So we're a very leisure trip driven market, mainly coastal and rural properties. We don't have an awful lot of urban stock at this point in time. So it's really interesting listening to Adrian's points there. We probably approach a few things from a different point of view with our PMC model. And I'm going to focus today really around looking at how we, what type of data we try and use on a daily basis to approach our pricing model. So a little bit of background on Host and Stay. We try to approach or provide a millennial approach to a traditional market. A lot of our bigger competitors, Sykes, Cottages.com, Travel Chapter, been around really for a couple of decades now in the holiday let industry. And we're really been trying to take the best of what happens in the short-term tech-focused model and really apply that to a traditional market. We target high-end properties that fit within the top 15% of the market area. So we have premium prices that are reflective of the quality of our properties. We have a flexible length of stay, which is one of our key points versus many of our competitors who approach quite fixed models on changeover days, Monday to Friday, Monday to Monday type of models. Highly desirable interior styling, so that the style and the type of accommodation we provide is really key to our Host and Stay model. And stunning professional photography is a big thing for us. Something that a lot of owners and PMCs as well seem to not really focus on. So it's a real USP for us. And from our owners' point of view, hands-free, hassle-free, fully managed service. So we have just over 500 units on the Host and Stay platform at the moment, and we fully manage 90% of those properties. So everything from booking generation, pricing, guest communications, cleaning, linen supply, maintenance, all done through our in-house teams. We have a team of just over 200 people in Host and Stay at the moment, and that's growing as the portfolio grows. So in relation to our revenue management structure, we obviously use Guesty and been a Guesty client for several years now. And the Guesty analytics dashboard and the data within that dashboard is reviewed on a daily basis by our team. We do some different things with that I'll touch on in a minute, and we turn that into different reports that get used in different ways. But that core data and the data within that platform is essential to our everyday business from an operational point of view, but certainly from a revenue management perspective. And we also use Beyond as well for our dynamic pricing elements. So where several years ago we had a lot of flat price and maybe weekday, weekend pricing, trying to pick up key events. Obviously now with the Beyond tool, we can pick those up in real time. And then obviously we'll overlay our own strategies on top of that to try and make sure that we are maximizing that dynamic pricing. Key thing that Adrian touched on is not just to kind of set and forget, but actually utilizing those tools along with the data to set the right type of pricing strategy. And then a recent addition to us in the last few months has been a dedicated revenue manager. So we've now got that in place. So our revenue manager will utilize these tools on a daily basis, work with our owners team, our operations team to work on that pricing strategy. Obviously, we're a bit different as a PMC. We do have some of the stock on the Host and Stay platform that's our own, so we can have a slightly different approach on pricing to those properties. But then for the properties that we manage, we've got a vested interest in driving occupancy, driving rate. But one thing I'll touch on in a minute is length of stay is a key variable for us because it dictates our revenue as well as from a PMC perspective. So in terms of distribution, one of the key things for us from a host and stay point of view has always been a focus on direct bookings. And we approach our revenue strategy different for direct bookings as we do to what we do from a partner point of view. So currently around 30% of our bookings come through our host and stay website directly. We've grown that over the last few years. So you'll see there in 2019, we were just over 20%, grew that to 28% in 2020, tracking around 30% so far this year. And our objective is to get to a 50% direct booking contribution by the end of 2023. So obviously we have a lot of different marketing strategies in place with that. But we want to really strike that balance between not having an over-reliance on the OTAs. However, that is a massive core part of our strategy, and also not trying to rely solely on direct bookings as well, which again, many of our traditional competitors, that was always the old model, if you like. We do see with direct bookings that we get a higher ADR, higher average value of booking. And we also see that our higher end properties and our larger properties also perform much better from a direct booking point of view. So anything that's not, let's say, a commodity property already has a natural flow to generating more direct bookings. So I think on the revenue front, I think that still needs to be a key part of the makeup for any PMC or any operator really. And on the partner front, we have 3 different tiers of how we classify our partners. So we've got the short stay model, so Airbnb, Booking.com, TripAdvisor, Expedia, where we're listing our properties to drive the volume of bookings. As we get into lower season, because we are leisure based, as soon as we hit November, December, really through to the school holiday period in mid-February in the UK, we try and focus on generating some longer bookings, corporate contractor style bookings. And we use some of the longer booking platforms or the rental platforms to do that. So Rightmove, Zoopla, On the Market, our portfolio base will be distributed to those channels as well to try and generate that different type of booking. And then for our luxury properties, we have a host and stay luxe category where our 5-star plus properties list on Marriott, Homes and Villas, and also Plum Guide, again attracting a different type of audience, different type of booker, higher ADRs. So depending on the type of property, depending on the location, depending on the type of year, will determine how we distribute our properties across the different OTA partners. And then looking at our operational policies, so across our portfolio, more or less a standard, certainly across 95% of our current portfolio, we set a 3-night minimum as standard for a booking that is made 70 days plus before check-in. So we're trying to build a bank of longer bookings, but we want to keep a balance. You know, our focus isn't on generating bookings of 14, 21, 30 plus days to keep down operational costs, because for us, changeovers are a big income generator for us as a fully managed PMC. So we want to build that bank of longer bookings for our owners and tap into those. But as we get closer to check-in, again, as Adrienne showed in the data set, we see that length of stay come down. And again, we try and play to that. So inside 70 days in many of our markets, we reduce the minimum stay down to 2 nights. We, in the main, always have 1-night gap fills switched on because we don't want to miss an opportunity, one, from generating a new guest on our database to generating a review. So we want those 1-night gap fills. And then inside 10 days, typically on properties of 2 bedrooms or less, we do offer last minute 1-night gaps, or 1-night bookings, sorry. And again, we try and encourage owners to go down that route, because if it is a new property, it means they can generate a booking, they can generate a review, they can generate a guest note, and we don't know whether that guest might then book the same time next year for 2 days or 3 days or 4 days. And it's increasing the database that we've also got to tap into from a direct booking point of view. In the main, we run strict and firm cancellation policies. We are looking just now, because we're in low season, of making those more flexible. But again, in terms of the markets that we operate in, being leisure focused, being rural, coastal, when we secure a booking, what we don't want is an awful lot of last minute cancellations that become difficult inventory for us to resell. So having confirmed bookings and the low cancellation rate is really key to our model. And also where we are heavy on the management side, and owners that are operating in a more traditional holiday-let market, we want to make sure we're securing bookings for them that don't have a high cancellation rate. And typically, obviously this year and 2020 is a little bit different, but even on the likes of booking.com, we sit at less than 15% cancellation rate in the main. So we are towards the bottom end on cancellations rather than having high turnover. And then we set pretty strict policies around non-refundable. But we do offer guests, if they book 60 plus days in advance on booking.com, we do offer non-refundable rate to try and encourage that and give a slight discount for doing so. So we play around with some policies and different types of offers, but probably a little bit less than we would do if we were more of an urban operator, as it were. And looking there, our key objectives on our policies are, one, to generate high average ADRs, but with an average length of stay of around 3 nights. And that 3 nights is a real sweet spot for us as a management business and driving revenue through our housekeeping side of the business, but maintaining the balance for our owners and keeping operational costs at a reasonable level, but keeping ADR high. So actually from a revenue perspective, operational costs might be a little bit higher, but our revenue is far outweighing because our ADRs are much higher. So there's probably a little bit of a different swing on things to what the industry is in the main, but that's very much driven by our locations and our leisure bookings, really. And on the reporting front, so one thing we do run every single day is a daily booking report, and we use the 2 data sets from Guesty and from Beyond to run that. So just to give an overview of the types of things that we look at new bookings that were generated yesterday. We look at the gross revenue generated from those bookings. We look at the net revenue that's going to our owners, the commissions that we've generated, the booking fees that we've generated as a business, and the average total booking value. Cancellations. So what cancellations we had yesterday, is there any uptick on trend on that, and what does that give us as a net position? And then we're always looking at things such as the lead time, the length of stay, the average nightly rate. We're looking at the average bedrooms that are being booked on a daily basis, because again, our portfolio ebbs and flows on the number of bedrooms we have as an average, which has an effect on our average booking value, but also on our average changeover value as well, which has a margin impact for us as an operator. And then what our channel split is. So again, are we seeing more of a swing towards direct bookings or a particular channel based on what we've got running at that point in time? And we always track the averages in the given month versus the prior month. And then what we also look at is looking ahead at occupancy and revenue and particular day and month on month changes. So we want to see for December, what was the December booking value change day on day and month on month, so we know how we're tracking. And then we also look at detailed occupancy by week for the next 2 months, and then a visual occupancy for the next 3 months. And I know this will be not the easiest to see on slide, but this is kind of just a snapshot of what that all-in-one reports look like. So it's there's a visual aspect to it, and then obviously the data aspects as well, and that goes out to all of our operational team, and then with some actions off the back of it as well. And then what we also do now that we've got Gary in place as our revenue manager is we look at more sophisticated weekly reviews. So a weekly review is always something we've had in place for the last 3 years as a business, but we're getting more sophisticated now in terms of the data that we're looking at on those weekly reviews and what actions we're taking. So we will now have a bookings outlook on that weekly review, and that will be portfolio wide. We'll look at our different markets, and we'll look at those the last 30 days, the next 30 days, and the next 90 days, and things around booking pace. So we pacing too fast, or we pacing too slow, average booking values, occupancy as well. And then we'll also take that down to looking at that at property level within those markets. And then we'll also look at our underperformers. So on a weekly basis, we want to know which properties are not performing in the portfolio from a booking perspective, and discussing and taking action on those properties. And that might not always be price related, or we know price is a key driver, but that might be looking at the images. Is the first image the best image of that property? You know, if it's a 5-bedroom property, is the first image a communal area, or is it a bedroom? Because we found that the communal area photos perform better the bigger the listing. The smaller the listing, we found that bedroom shot as a first image ends up with a higher CTR. So we'll play around with some of those things. We'll look at descriptions. We'll check amenities and local area information. Is the listing fully up to date as it possibly can do, to drive all of that before we go and, and slash prices, or if a property's overperforming and putting the price up. So there's a whole host of variables that go into it, price just being one of those. So hopefully that gives you a kind of a little whistle stop tour from an operational point of view as us as a PMC, the types of things that we're looking at and what we're trying to really do with that data. And it's great that we've got the data coming from Guesty and what we're getting back from a listing perspective, and the same on Beyond. But we still do have that in-house team that are looking at that, crunching those numbers further, and then actually taking action on those. So it's great having the data, but it's all about what action we can take on the back of that. So hopefully that was helpful, guys. There's my contact details there if anyone wants to get in touch with anything. And yeah, thanks for having me.
Yeah, that was fantastic, Dale. Thank you very much for all that information. It is, it almost seems a little bit overwhelming, the volume of variables that you guys are considering when adjusting your pricing, right? You're talking about cancellation policies changing based on kind of booking window. You're talking about the booking window itself and the length of stay requirements or the minimum night stay requirements. And all of these little kind of changes that you're making across the board are helping you optimize your operations, obviously, of confirming kind of reservations in a longer booking window. But it does come with some sort of profitability hit or pricing hit, because you're what I'm assuming, because of the strict length of stay requirements, you're probably reducing the rate just a little bit so that you could still stay competitive at that booking window. Is that right?
Yeah, absolutely, Paul. Yeah. And for us, keeping the balance on length of stay is key for us as a business, because host and stay, 40% of our revenue comes through our ancillary services side, through our housekeeping side, our maintenance side. So length of stay has an impact on that for us as a business. We're not stacked up to have lots of bookings at 20 plus nights. We're stacked up to have shorter bookings at higher average values. So typically, again, versus our market competitors, we're delivering 50 to 85% higher revenues in a month than what our competitors are at shorter lengths of stay, but that higher revenue is still producing a better bottom line performance for our owner, and obviously drives revenue for us, drives our database. We would rather have 8 guests in a month than 1, because our database is eight times bigger. So we can generate more direct bookings. We can tap into a larger guest pool as well. So it's probably a slightly different approach, but our market area does dictate a lot of that as well.
I love it. And also your competitive advantage continues to grow with that volume, because to your point, you're talking about the populating your CRM and then driving, I'm guessing, marketing campaigns to your direct booking. And then you said that your direct booking engine actually returns higher ADRs than the OTAs do. Is that top line, or is that after you take out the OTA commission?
So top line. So top line ADR is higher on our direct bookings. So for us, that's good from a marketing point of view, because at the moment that gives us more budget to play with from a marketing perspective, so we can continue to drive that direct booking aspect. And then over time, as we start to reduce that, as the direct booking contribution increases, we can put a bigger focus on it. But the same as that, there's always a place for the OTAs as well. So it's really striking that balance.
Yeah, great. Well, thank you very much for that. That was a ton of information, but very valuable. Thank you, Dale.
Cool, thank you.
Let's shift over to Ryan from Beyond. I'm sure a lot of the people on today's meeting know Beyond, a leader in the dynamic pricing kind of space. And so excited to hear what Ryan has to share.
Yeah, thanks so much, Paul. Thanks, Guesty, for having us on too. Really excited to chat about the topic. Super pertinent, I think, given the past 2 years. And Adrian, Dale already went over quite a bit that I think I'll sort of repeat and cover here and make sure we drive home in terms of revenue management. So here at Beyond, for anybody who I haven't met, my name is Ryan Saylor, and I'm on the revenue management team at Beyond. A little breakdown on what we do here sort of behind the scenes. We're responsible, our team, for the millions of prices that we're pushing out every single day. So launching new markets, adjusting markets, optimizing our algorithm. We've been pretty busy since early 2020, as you can imagine, but that's sort of what our entire team does here on the revenue management side at Beyond. So today I want to go over a couple things, mostly around the types of data that we're using to come up with prices and suggestions for property management companies. The first question I want to tackle, Adrian sort of touched on this briefly, is historical data dead? What do we do with it? How are we using it? How do we use it moving forward? Break down, sort of what we want to pick from historical data in each market. And then also, sort of supplement that with future trends. So what are those most important metrics that we're looking at forward looking in your market or for your portfolio? Things that we're doing and optimizing on the back end, and then also things that you should be on the lookout for as well. And then I want to wrap that up with a little bit of proactive revenue management. Dale covered a lot of this in his example of what they do, but really hone in on what revenue management is, how we define it, and really what the practice should look like for everybody moving forward to truly optimize your strategy here. So starting with pricing with historical data, we know, since the beginning of COVID, a lot of people threw it out using historical data. Seasons changed, dates changed, events were canceled, things like that. And I think historically, a lot of people might be familiar with this type of pricing curve. So this is what we would call more flat pricing. You can see here where the property manager was increasing prices for like high season, decreasing for low season. We know we can increase prices for Christmas and New Year's Eve, things like that. This strategy was pulled from historical data, maybe not exact data points from the market or your portfolio, but when high season is, when the events are, what they can do and how they can perform in general at a high level for your market. If your pricing strategy looks like this, please email me or talk to anybody on this call. There's plenty of ways we can optimize it. This is what we call more like old school pricing that really is based on a lot of that high level historical data that we know. If you've never seen a dynamic pricing curve, this is what it looks like. It looks pretty chaotic, but all we're looking at here is a different price for your listing every single day of the year. That's all based on market supply and demand and sort of knowing what we can charge and what we can get away with in periods of high demand and what we need to do to actually sell your listing in low season as well. And again, here you can see the nuances coming from historical data. You can see that high season, you can see events and low season, but we're also factoring in maybe different pricing for specific events and specific days, or specific pricing for like weekday versus weekend pricing. I know we had a question pop up already on that. So you can still see how historical data is important here, but we might lean a little bit less on what we've seen in the past 5 or 10 years and more on what we're seeing in the future. So to answer the overall question, no, I don't think historical data is dead. I think we rely on it a lot less. But even knowing when general high season is or general events and holidays to look out for is still important information to know. I think everybody's aware of it. We fold it into our tool, but still an important key. And we want to look sort of to the future and sort of what's going on ahead of time, booking pace wise for your market to make some better informed decisions. So that being said, what got you to this point isn't going to get you to the next step in this industry. Using all that good historical data, what you've set up in the past is great, but really in order to evolve, your strategy needs to stay proactive instead of reactive. Think about if you had set your pricing and your entire pricing strategy on January 1st, 2020, and you didn't update it until January 1st, 2021. You probably miss out on a whole lot happening in your market through the year of 2020. So staying on top of some of these future trends is important to keep in mind moving forward. So I'm going to move through 4 that we take a look at internally, sort of by market and by neighborhood to make adjustments automatically and manually on our side of things with the pricing algorithm. But these are all things that you should look out for too. All things that you can see either on the Guesty side, directly in Guesty's insights, or in Beyond Pricing as well. The important thing here is to make sure that you have this data available at your fingertips and you're able to act on it. So I think Paul mentioned this, Dale mentioned this, Adrian mentioned this. Using data to actually inform the decisions that you're making is key. We have a lot of data available to us right now, a lot of different systems, a lot of different tools, but the important part is being able to identify things, make changes to your strategy ahead of time before the rest of your market. So the first thing to look out for is increased cancellations, or really any change in cancellations. You're going to see this at a portfolio level. The key thing here is to see it at a market level ahead of time. We saw a spike in cancellations for some markets over in Asia starting even early July or early January 2020. That was our first inkling that something was happening with the pandemic, with COVID at the time. So that told us, hey, more people are canceling. This might be a reason to either lower rate or revise cancellation policies, or in other ways, look at what's on the books in the future. So always keep an eye on that, especially at a market level, and make sure you have it handy. Second thing is going to be any changes in booking pace, either positive or negative. Also coupled with cancellations is a good indicator compared to historical booking pace or historical stats that you normally see in your market. A great red flag in something going on either for a specific date or in general across the board. Third thing here is any shifts in length of stay. I think a lot of people through 2020 expected longer lengths of stay throughout the entire year. High level at Beyond, we saw a pretty big spike for really like April and May in terms of length of stay, but that sort of died down by the time we hit even June or July. So we saw an immediate shift, really just with a decrease in shorter stays and an increase in the few longer lengths of stay that we did see. But overall, things are relatively back to normal, maybe slightly elevated at a global level, as people have sort of returned to more of those shorter, more common stays that we saw in the past. But any changes here is going to be a change in that guest behavior. Adrian touched on this too, and we'll talk about it in a minute, but understanding where your guests are coming from, how they're booking, what they're doing, how they're acting, is key in sort of aligning your strategy with them moving forward. And finally, this is kind of evergreen for the industry. Any sort of change in regulations, and especially stricter regulations. We've talked about for years regulations as far as the short-term rental industry in general, but one thing that we started to focus on a lot more here at Beyond through the pandemic was local regulations. Do your feeder markets have restrictions on travel? Are most of your guests going to have to get tested or have some sort of requirement to actually visit and be in person in your market? Are you identifying that ahead of time, able to prep for it and replace that business or even emphasize that business in certain ways? That's one way that you really can't pull directly from the data. But if you're able to keep up with what's going on and sort of pinpoint in the news how things might affect you ahead of time, you can make those changes and really maximize your strategy here. So next, I want to cover revenue management in general in a big sort of coverage on our insights here. I know Dale had some of these charts, but here's an example of something I would use for looking for markets. Just a bump in paid occupancy for this upcoming February for this market is maybe an indicator that more people are booking ahead of time. Maybe rates in the market are too low, maybe some room to increase here. This is an example of market level data. So you're not looking internally, you're looking ahead into the market and seeing how guests are booking and how basically your competition is booking up into the future, which is helpful. Also with cancellations, here's cancellations by market by stay date. Prime example of what happened in 2020, this rise in cancellations. Getting ahead of it at a market level is super, super important. I think at this point, we didn't have much to do, but moving into 2022, even any rise in a variant or any sort of travel restrictions, seeing a spike in cancellations, even tiny in your market, might be a good indicator that you can act on with your pricing and revenue management strategy. So again, at a high level, I just want to reiterate, there's more to revenue management than just pricing. If you're just focused on pricing and that's your main focus for your revenue management strategy, go back to putting yourself in the guest's shoes and understanding how they end up booking one of your properties. How did they get there? What photos did they view? What reviews did they see? Sure, a lot of people do end up booking based on price, but understanding the levers that you can pull along the way is a great way to influence your booking pace and booking strategy, even before you get to lowering or increasing your price. Dale mentioned that process that they go through. That's great. Everybody should be going through that if you have the time, because there's a lot more that you can do to influence that booking pace than just changing up your pricing. So at a high level, this is kind of what we see in your revenue management toolbox. Dynamic pricing, I think, is a great baseline foundation for you to build the strategy on top of. Distribution is a big one as well. Which channels are you selling on? How do you segment different types of business for different types of channels? How do you fold that into your whole strategy to really maximize revenue throughout the entire year? Direct bookings, content, all that stuff rolling into your revenue management strategy. Your overall marketing strategy, promotions and discounts, all about pricing and all about getting people booking. And even what Paul went over earlier, your average review score. How is that folded into your pricing strategy? How are you keeping an eye on that? Your guests are looking at it, so are you auditing that as part of your revenue management strategy as well? So that's all I have today. I want to finish up on that revenue management piece, but again, super excited to be here. If anybody on the call today, if you've got more than 11 listings here, we're happy to dive in and take a look at a deeper dive for your specific portfolio and market. So feel free to reach out to our team either through this QR code or directly on our website. And for anybody interested in those charts, those cancellation charts, the paid occupancy charts with your market data, you can connect to Beyond for free. You don't have to use the pricing product at all. You can do that on your own if you want. But you can connect to our Insights product, take a look at all the data for your market, and use those in your strategy as well. So thanks everyone for the time today. If you have any questions, feel free to throw them in Q&A. Otherwise, you can reach out to support@beyondpricing.com for any general questions if you're a current user, or even if you're not using us. And my email is just ryan@beyondpricing.com if anybody has any specific questions for me.
Awesome. Thank you very much, Ryan. That was really informative. It was interesting that you highlighted kind of the length of stay kind of normalizing after that April-May kind of time period. Did you see the same kind of normalization when looking at booking windows as well, where, like during the pandemic, the booking window basically collapsed and all we saw was like inside of 10 days. Are you seeing that kind of restore itself as well?
Yeah, absolutely. Great question. I would say at a high level, pretty much restored. In general, we're seeing slightly elevated booking lead times. But really, I think that the biggest insight here is that we're still seeing quite a few people book in that normal shorter booking window that we've seen in past years. But we're also seeing the other end of the spectrum where a lot of people are booking a year plus out, maybe to either secure bookings or to get ahead of it and sort of say a year from now, I'm going to be able to travel. We are still seeing a lot of that. So on average, we've seen things definitely align back to normal in terms of booking lead time, but we are still seeing an uptick in people booking way far in advance, like at least a year or a year plus out.
Wow. I didn't even realize that people were planning that far in advance. I can't even know what I'm going to do next week, let alone in advance, but bravo to those folks. All right. Well, thank you guys very much for all the presentations. That was very informative. A little bit more from our panelists. I know that we had some questions in our Q&A, and there was one in there that I think is very top of mind for a lot of our PMCs, which is, if I'm optimizing for revenue, with optimization of revenue comes certain expectation from a guest staying within a unit, and maybe those expectations aren't necessarily met at that revenue point. And so thus my reputation score starts to decline as a result of me trying to get a price point that maybe my particular listing isn't qualified for. Have you, I'll ask Adrian, because we haven't heard from you in a little bit. Have you seen kind of this dynamic at play, and how do you adjust for that? And how do you properly set expectations, maybe even with owners, to say that we shouldn't go after this 3x price point because it'll ding your reputation?
So very, very interesting question, Paul. So yeah, I think that the main key element that you really have to know the characteristics of the property, right? So yes, even increasing the ADR and revenue, you will have a maximum point of your property, which will create a guest expectation, which is not exactly the reality of the property. So what we do at Angel Host, we monitor all reviews for each property. So whenever there is a red flag for any kind of property where we have a really bad review and we know we increase the rates, then okay, maybe there is something what is not exactly in the same line with the guest expectation and the property characteristics.
Okay. Yeah, that makes sense to have basically these top red line or red alarm kind of, we're dipping into a inventory type that maybe we're not supporting in this particular listing.
Exactly. For example, a normal, let's say an average property, which you sell, for example, at $100 in average, of course, it won't be worth that for $500, right? So it's a totally different type of property.
That's right. And it goes back to the point of what you said, where your house isn't your neighbor's house necessarily. And so your competitor isn't necessarily your neighbor, because it is dependent on size and amenities and all these various different things, even though a guest looking at it, maybe just at the metrics, may assume that this house is going for this price, so this house is worth that same price to me as an ADR. So, hugely impactful there. Dale, I know that you talked about kind of using a dynamic pricing tool, but also having a very sophisticated kind of revenue management program built into Host and Stay. Can you talk to us a little bit about that relationship of how you're leveraging kind of the suggested data of a dynamic pricing tool, and how your revenue managers are are plus oneing it or adding more value on top of what you're capturing?
I think it comes back down to the analysis, Paul, as we've said a few times now. Really, having the data is fantastic, but it's about what we do with that data at operational level. Again, with the Beyond tool, we get suggestions through on where a price should be, but every one of those still needs to be reviewed. Booking pace is picking up, and we're increasing base rate, and bookings are still going. There is always that risk, as what you guys have just touched on there, of how far can, where is the ceiling price for that property? This year's a perfect example for us in our leisure localities. ADRs are way up on 2019, up on 2020, but there still is a ceiling price for a property where if we go past that, you've got a detriment or the potential impact on reviews. If the guest expectation is therefore way high and we can't deliver that property is going to get a bad review. Your review score's coming down, and all of a sudden next year you're below where you were 2 years ago because the review score has dropped. So I think with having that, the physical revenue manager in place, it's kind of sense checking, applying some personal touches ultimately to what the data's telling you and what the system's saying and everything else. I still don't think it can be completely system or AI driven. Let's say it still needs that local knowledge. We operate in a smallish area at the moment across the 500 properties, so we know our key markets intimately. And again, I think that revenue management aspect is key at that. So Whitby, as an example, is our biggest market. We know that market now inside out, back to front. That's a big plus point for us as a PMC, but it also helps us, drive the right revenues. We kind of have a gut feel of how a property should perform. And if it isn't hitting that mark, then we know there's something wrong. Or if an outlier is performing significantly better, then it sparks the question of, well, should more properties be performing than that? Or if we just push that property too far and next year we might push it too far and it's going to retract in terms of its performance. So I think it's that personal touch, and that personal element still is essential really for proper maximization.
Yeah, that makes perfect sense to me. Obviously, you could use all these kind of AI and algorithm as a directional compass in which you're trying to take your revenue management, but it's knowing your market's intimate kind of performance that will really kind of elevate kind of those dynamic pricing elements of your strategy. Great. Ryan, I was going to ask you, what are the major blockers for property managers to integrate basically a scalable revenue management solution? So what's out there that's prohibiting from people to actually address and optimize their revenue management?
Yeah, I think the biggest blockers are just cost and time, truly. It's not feasible for everybody to have their own dedicated revenue manager as much as we want to preach that. So being able to figure out how to divvy up time and all those revenue management tasks and sort of decide what's important. But I think that the key here is leveraging technology on top of that. So sort of what we talked about, forget your set it and forget it mentality. Like, you have to manage these tools. You need that know-how. But with like a pricing tool or even a property management system, you're able to automate certain processes and have a more advanced strategy in a quicker and more efficient way to save time elsewhere. If you have sort of a smaller team or can't dedicate somebody towards revenue management. So I think that's the biggest key, and that's a pretty big blocker that we usually see. But I think the big theme here is just saving time with these types of strategies, and building the processes where you're not setting your manual rates and you're not having to react to things in the market on your own, is sort of the important part.
And then I'll let us out with a question from the audience, which I think, Ryan, you'd probably be best suited to answer, which is, do you see kind of these high spike in increases for weekend bookings prohibiting people from extending their stays, going for 4 days because they're paying so much on the Saturday, Sunday, or Friday, Saturday rates?
Yeah, it's definitely an interesting topic when you look at somebody trying to extend a stay or look at a longer stay, if they're sort of flexible in how long they want to actually stay. So we focus a lot. One of our three main factors in pricing is that day of week factor. So if it's a market where everybody's traveling on Friday and Saturday, we know we're going to be able to push rate and drive revenue for those dates. But then we price, the Thursday or the Sunday or even the Monday pretty much a lot lower than those days to make it more attractive to book. We're also working on a new feature where if you have a booking already in there for, let's say, 4 days of a peak holiday, and there's a 5th day that still has holiday pricing, we go ahead and lower that a little bit, knowing that the majority of that day range is sort of already booked up, to incentivize somebody who's maybe already made that booking or somebody who's looking to make a new booking on that day to go ahead and book it. So it's something that we're continuing to optimize, but it's important to have that day of week factor, since truly, again, from the guest perspective, people value different days in a different way, and it's significant when it comes to the actual price.
Got it. Yeah, that's smart. Obviously, the Thursday preceding a Friday should still probably have a high ADR associated to it, but that's Sunday, Monday, Tuesday, probably less so. So that's the way you're driving longer, like the stays past the weekend, not necessarily on the front end of the weekend, I would assume.
Yeah, making it more attractive for somebody to stay, and really, even if you have a minimum stay requirement throughout the entire year, still making it feasible for somebody to stay across the entire week and have that average price across the nights be realistic for a 4, 5, 6, 7 night stay.
Yep, makes perfect sense. All right. Well, thank you to all of our panelists for joining us. I got a ton out of it. I'm sure that the attendees did as well. So a huge thank you to you guys. Have a great rest of your day.
Have a great day.